Started now that it's 2 o'clock. Welcome everyone to the March Accounts Receivable Core Committee meeting. My name is Gerald Floyd. I'm the Statewide Accounts Receivable Management Coordinator here at DAS. Glad you could join us on this sunny day. Hope you all are enjoying the nice weather while it lasts. So with that, we'll go ahead and get started on our agenda. First up, some swarm announcements. Just a early reminder, because we don't have an April meeting, that the Q3 ARPM deadline is April 30th. So just keep that in mind as you get into the beginning of April, that is a deadline coming up. And with that, any questions on the ARPM reporting? I know it's kind of an old hat for most of you at this point, but just want to make sure that if anybody has any questions. Okay. Moving on, legislative session review. Now that the 2024 session is over, just wanted to kind of share with everyone some of the bills that we were tracking. You should be able to see the spreadsheet on your screen. I can try and make it a little bit bigger. We have to slide back and forth, but all of the bills that you see here at the top all died in committee. Some of them did get kind of partway through, but they didn't actually get through both chambers. It is possible that we may see them again in the 2025 session. But anyways, the only one that did pass is Senate Bill 1595, and that has to do with garnishment exemptions and executions. And just kind of wanted to share, these are the main points. I'm certainly not I guess what you would call a legislative expert, but I went through the enrolled version of the bill, looking for the majority of the items that would impact state agencies. Did somebody have a question? Okay, just checking. So first off, it modifies ORS 18345 regarding the value of exemptions for vehicles. It increases that exemption value to $10,000. So if the vehicle is valued at less than $10,000, it is exempt from an execution, where basically you'd have the sheriff seize that vehicle and sell it and use that money to pay the funds owed on the garnishment. It does not change for debts arising from child or spousal support. That was one of the big things in the session with some of the amendments that went through. It keeps the current values for child and spousal support as they are in the statute today. So vehicles would be at $3,000. All other executions would be a vehicle value of $10,000. Probably the most impactful for agencies is the garnishment exemptions. And I tried to do a little table here that shows what the bill does in terms of increasing the value of those wage exemptions. It gets a little confusing because they have multiple categories based on the frequency that somebody is paid. And there is a calculation that goes along with that. But basically let's just use, to keep it simple, the monthly exemption is currently $1,090 per month. As of January 2025, that will go up to $1,309 through June of 2025, and then it will increase to $1,458 for a year. And then after July of 2026, it goes up to $1,792. And beginning in 2027, the state court administrator is required to basically do a calculation and have the new values posted on the Judicial Department website that basically kind of essentially keep track for inflation is the simplest way I can describe that. This actually does a number of things. It will automatically allow for the modification of that garnishment exemption to keep track with that inflation and changes in the minimum wage and so forth. Whereas in the past, this has been something that required legislative action so that it would stay the same amount for, say, 3 or 4 years, and then somebody would introduce a bill to increase it to whatever the new rate was that they deemed appropriate based on inflationary factors. So that is the biggest piece of this. There is some other changes as it relates to homestead exemptions. It increases that again, except for debts owed for child and spousal support. And again, on the wage piece, the child and spousal support remains at the current $1,090. It does not go up with the inflation. And then lastly, there is a financial institution exemption. And this basically puts a lot of the responsibility on the financial institution to effectively do an evaluation of the contents of someone's bank account and determine whether or not there are any deposits associated with federal benefits, public or private retirement plans, public or medical assistance or unemployment compensation, et cetera. A number of things that they have to look for that are exempt from that garnishment if it's within, I believe it's a 2-month period prior to the garnishment being received. Any funds that are in that account aside from that are subject to the garnishment. And again, the base protected account, they call it, does not apply to garnishments for child or spousal support. And that base protected balance starts off at $2,500 and then has those other exemptions that it's looking at. And the idea is that they don't want a garnishment to take every penny out of a bank account and then people can't buy groceries and pay their utility bills, et cetera. So that's the idea. It is a rather complicated process, I will admit, and the forms that are in the bill or that will go into the statute are going to become rather lengthy as a result of all of these changes. So be looking for those model garnishment forms on the DOJ website to be updated as a result. And then again, those base values are indexed by the state court administrator each year. And so there will be regular updates to those as a result of this bill passing. So just wanted to, again, my Cliff Notes version of this bill and what it does and what I see is probably the primary impacts for agencies, especially those that have garnishment authority, agencies with warrant authority, civil penalty agencies that record their penalties with the county clerk have authority to garnish. So this could affect you as well. So the other piece, excuse me, is as a result, accounts that are assigned to Department of Revenue, this will impact those garnishments that they issue. And so this is going to have I'll call it at least an incremental impact on their collections that they're able to do, because now those garnishments won't produce as much as they would have without the exemptions going up. So just something to keep in mind. Doesn't mean that, you know, they're not trying their best to collect, but it is a result of this statutory change. So it affects both government and private sector garnishments. So with that, I will pause and see if anybody has any questions about Senate Bill 1595. Anybody? Hearing none, we'll move on in our agenda. Bankruptcy. This is an area that I know a number of folks are a little fuzzy about, a little worried about, you know, breaking the rules of bankruptcy. I wanted to share that the National Association of Attorneys General, and before I go on, I should thank Doris Olivan at DCBS. She basically told me about this training at the National Association of Attorney Generals. It's a Bankruptcy 101 training. It is a 5-part video training that they have on their site. You do have to register as a member, not a member, but basically an account, create an account at the NAG website. And then they have offered to provide access to that training for free for state agency staff. And to facilitate that, I will be asking those that want to access this training to email me at the SWARM email address, and basically provide the name and specifically the email address, because that is basically how you create the account at the NAG website. And I will then submit all of those list of names to those folks, and they will then grant the access. So I will then, once I get confirmed that they have put that in, I will email all of those folks. I think you'll probably get one directly from them as well. But basically then letting you know that you can access that training. It's not something you have to sit and watch in one day or anything like that. I believe when I was looking at it, you have like a year to complete it. But it is at least in, you know, a 1.5 hour increment, 5 different sessions covering different topics associated with bankruptcy. I think they do a really good job of describing the automatic stay. Heidi, you have a question?
When you went out, was things printable so it could be shared with people in your unit? We have a lot of people in AR, so it's beneficial for all of us to have it.
Oh, you could have multiple people from the same agency get access to the training.
Okay, just send you the list then.
Yep.
Awesome, thank you.
Yep. They didn't give me a cap. They may regret that, but they didn't tell me that it was only for so many people. But whoever you would like to have access to that, and they do have within it, there's a section that you can click on and actually view the slides, so you can kind of watch those separate while the folks are talking. And I was able to actually download those slides, and so you should be able to do the same thing. So if you have somebody that comes in after you've completed this and you just want to share the slides with them, that would be available to you as well.
Great, thank you.
Yeah. So I would ask that anyone that wants to watch this training to let me know by the end of the month. To again email me at SWARM, and I'll put this in the minutes as well. and then we'll get that list over to the folks at NAG, and hopefully they're not gonna correct me if I'm not saying their acronym the way that they would, but I call it NAG. And we'll get that access out as soon as they get everyone entered. The other piece, and I will put this in the minutes as well, like I said, all of the folks that you do want to have the access, aside from emailing me their name and email address, each one of those people do need to create an account at the NAG site, which will be in the minutes. And so just keep that in mind. And that way they can provide the access to the account that is created. So any questions on that training? Okay. So with the topic of bankruptcy, just wanted to kind of remind everyone that, you know, as far as an agency's responsibility, when you are notified of a bankruptcy, it does not mean you automatically write off the account, and I use that term loosely. You don't zero out that account because they filed bankruptcy. They have to receive a discharge, and your debt has to be one that is dischargeable under the bankruptcy code. And those are some things that they discuss in the training. I wouldn't say that they go into specific examples. So for your agency, if you are unclear as to whether your type of debt is something that would be discharged in a bankruptcy, depending on, again, the chapter that they file, I would suggest reaching out to your DOJ contact, and they would be able to answer those questions specifically for your agency and your type of debt. So what an agency does need to do is be able to monitor that account through the bankruptcy process, and if applicable, file a proof of claim. Some chapters, for example, if it's chapter 7, no asset, they're not going to ask you to file a proof of claim because there are no assets to distribute, even if somebody did have a valid claim. But all of those things can be found on a website called PACER. It's basically a court electronic records, public access court electronic records, I believe is the acronym for PACER. And I will put that link in the minutes as well. You would have to create an account. The nice thing about the PACER account is, while it will ask for information about your account that when you create it, it will create billings based on the searches that you do. But it is, so for example, if you search on a name under the bankruptcy court filings and it comes up with a record, and you click on, there will be a number of things that you can view in that that file. To me, the easiest thing is look at the status of the account. That's kind of the first thing. It'll tell you where it's at in the process, if it's just been filed, if there's been a scheduled meeting of creditors, etc. That will just tell you where it's at in the cycle of the bankruptcy. There are other documents that you can look at that would give you, you know, the distribution of list of creditors, and that the creditor, that the debtor submitted to the court. But each time you click on one of those documents, it charges you 10 cents. And the nice thing about PACER, especially for agencies that don't have a ton of accounts, is within, I believe it's a quarter, so every 3 months, if you don't accrue $30 worth of charges, they zero out the accounts and you start over. So for many agencies, you probably will never have to pay for this service. If you have, you know, thousands of accounts and you have hundreds of bankruptcies that you're monitoring and printing, you know, or viewing the various documents to monitor that status, you may accrue $30 in a quarter. So I just want to disclose that there is charges, but those charges are only if you exceed $30 in a quarter. So by monitoring that account, now you'll be able to know whether or not, if the case is discharged, then, again, based on the advice from DOJ, if your debt is dischargeable, then that debt no longer exists. You would zero out that account. You report it as an adjustment in your LFO reporting. It's not a write-off because it's no longer a legally collectible debt. And that's, you don't do any of that until the case is either discharged or dismissed. Dismissed means that the debtor did not complete all of their required actions with the court, and the court says, okay, fine, throw your case out. And the debtors and the creditors, can go back to collecting as if they had not filed the bankruptcy, because the automatic stay is no longer in place. Which the automatic stay is the term for all collection actions cease, which I will clarify when I say all collection actions. One of the things that's discussed in this Bankruptcy 101 training is there are certain elements that you can still do as a regulatory agency, for example, up to the point of collecting money. So you can still issue the penalties, especially for regulatory purposes. But if that action comes with a monetary value associated with it, you cannot, and you can still take that penalty. You can still record it to perfect your lien, but you can't actually do anything with the lien until the bankruptcy has run its course. You've filed your appropriate proofs of claim, things like that. So you would definitely need to monitor again where that is in the process, and only take the appropriate action from an accounting perspective once the case has been discharged. Dismissed, it still exists, you still collect it. Now, one thing I will say, if you have an account, you send it to DOR, and DOR can see that a bankruptcy has been filed, you were not notified, but DOR has access to data that shows that it was filed, they will reject the assignment, and it will tell you why. That is your then trigger to know that you need to use the PACER system to then monitor that account. Likewise, if you have an account that's already been at DOR and they get notified that that case has been filed, they will often cancel that debt back to the agency because DOR cannot take any collection actions at that point. Again, at that point, you still need to monitor the account and only take the accounting action once the discharge occurs, or if the discharge occurs. Again, all of these things are variable based on the chapter that they file. That you may file a proof of claim. If you have a secured claim, you can often get that included in the repayment schedule if they file the right chapter. So just wanted to clarify that. Heidi, you had a question?
Yeah, I know I'm annoying today. So I don't remember when I was told, but I thought that if they filed bankruptcy, it was only up through the time that they filed. So any new debts we could still pursue. Is that right?
Yes. And one of the things, and they do talk about that in this training as well. One of the things that while it is a debt that is not covered by the bankruptcy, it is oftentimes, and again, knowing that they have filed, and even if you see that your debt occurred after, and really what it boils down to is, okay, it's not just when did I create the invoice, but what was the action that caused you to determine that they owed you the money? If it was from an investigation, let's use a fraud case. You figured out that they made a filing for some benefit a year ago, but you're just now determining that that was due to fraud and that they need to pay you back. The reason for the billing was because of an action that occurred prior to. So the important piece is you definitely want to, and again, through the PACER system, you can get access to, for example, who was the trustee that was assigned. Write the trustee, let them know, what is going on, and if whether or not you are determining that this debt is before or after that filing. Even if it is a new activity that occurred after their filing, oftentimes it is good to let the trustee know, just so that in case the debtor tries to make the claim that this is a covered debt, and then you start getting notices from the trustee with a lot of language that can be very scary, you've kind of taken that proactive step to notify the trustee that you have this debt that you have determined is not subject to the bankruptcy because of the date that it was incurred. So yes, that is a big key component of bankruptcy. They're only covered, I will say typically, I'm not a bankruptcy expert, and even watching this video, you won't be an expert, but I would say generally that debt that is new is not going to be covered by that bankruptcy. You can still take all of your actions on it. Now, keeping in mind that if they're filing bankruptcy, that means that all of their money is basically tied up in that court. There's certain exemptions on what they can keep to pay the bills and that type of thing, but you're not going to be able to necessarily, if you have the authority, for example, to file a bank garnishment and take that money, that may be considered money that is being held for the purposes of the court determining those assets to be distributed to creditors. You don't necessarily get to come in and take that money before the creditor distribution, even if your debt did occur after the bankruptcy. So that's why it's always good to let the trustee know what's going on, just so that you don't get them upset that you were taking some actions that impacted how they were handling that case. Questions? Okay. Well, again, if you are unsure of what you need to do when you are made aware that someone has filed bankruptcy, please know that I am a resource. Again, I'm not an attorney, but I will at least guide you in what your next steps should be, whether that be contacting DOJ based on the complexity of the case, or just answering general questions about what you're seeing, like on the PACER status reports, etc. More than happy to do that. With no other questions, we will move on in our agenda today. Request for verification of agency AR contacts. So let me come over here. So on our Swarm website, we have a link over on the quick links side for Swarm contact list by agency. And this is basically a determination for, not a determination, but basically information of who is an AR point of contact for various agencies. This is something that if you have a question for an agency, maybe about something that they're doing with their receivables, this gives you a named contact. What I would like, we periodically will ask agencies to verify for us that these names are still correct. We do have, turnover from time to time, people, moving around, etc., retirements, things like that. We just want to make sure that we are keeping this list current. So please go and look for your agency and verify that those names are correct. If they are not, please send me the correct information, their name, phone number, and email address to the SWARM website, or SWARM email address, excuse me, and we'll get that updated and published with those changes as we get them. And so, you know, we appreciate your assistance with this, but this will just kind of help us make sure we've got the right folks out there for everybody to communicate with. Any questions on that? Okay. Next on the agenda, debtor information gathering. OM 35-2020. I've had a couple of occurrences with folks asking what are they required to do the OAM. This particular OAM uses a lot of shalls rather than must. But basically, this is talking about, when applicable, and I understand that there are some cases at some agencies where you're receiving a report of a bad doing, you don't really have an established account with a particular debtor or customer of your agency, so that you're not always going to be able to do this. And so that's why it's shall, to the extent possible, collect and verify information when they're establishing accounts receivable, or if you're receiving a check for payment, verify the address, ask for a phone number, ask to see a driver's license. The more information you gather here, the more useful it will be if the time comes that you need to send an account to the Department of Revenue. They're able to verify with, let's say you don't have a Social Security number, for example, but if you have a proper name, address, date of birth, driver's license number, they can basically on the back end say, we have this other account, it has all those same factors, and it's got the SSN. They can now associate those accounts in the work that they do to facilitate their collections. So if you don't have correct address or things like that, it really makes it difficult for them to truly do their collection effort, because they're going off of incomplete or inaccurate information. So I'm sure you've all had the occasion, whether it's contacting your medical office or anywhere that you have an account, your bank, for example. They always want to ask you, can you verify your name, last four of your social, what's your date of birth? All of those things are their way that they're ensuring that they're talking to the correct person. And so that's the kind of thing that we're talking about here, is whenever you are have the opportunity to be able to speak to the debtor, whether that be at the point that you're creating an account with them, they're not a debtor yet, collect as much information as you can. And at any point in the future that you are in contact with that individual, verify that information, because you never know when you may need it for collection purposes. So just wanted to share with everybody a reminder that this is an important element. If you do ask for a Social Security number, you do have to tell them that it is a voluntary for them to provide that to you, unless it is statutorily required. Say for a driver's license, there is a statute that requires you to provide your Social Security number to get a driver's license. Now, if you have a mandatory provision in statute, you cannot necessarily use that information in the collection of a debt without obtaining their permission under the voluntary disclosure. And that's in OAR 122 085 200. Talks all about the Social Security collection. What that OAR does not cover, just to be clear, is if you have the name, address, date of birth, etc., and you use a third-party skip tracing source, say a LexisNexis type of provider, data provider, and you put in that information, you do a search, and it comes back and says, I've got this record for that individual at that address with that date of birth, and it includes the Social Security number, you can use that in the collection of a debt because you did not obtain it directly from the individual. Now, of course, there's a risk that that data might not be 100% accurate, but it is not subject to the same voluntary disclosure requirement as OAR 122 085 200. So the more information you get, the better chances that either the Department of Revenue or their third-party collectors will be in being able to identify the individual, send their notices to the right locations, have the right contacts to be able to reach out to that individual to collect on that debt on your behalf. So it is truly one of the biggest things that you can do to increase your collections is have that accurate information. So any questions on that? Okay. Similarly, recently watched a webinar with one of the third-party debt collectors for the state. And one of the things that they brought up, and again, this was a webinar kind of to their general group of clients, not necessarily just the state. But one of the things that they recommended when you're, and it kind of comes back to this debtor information gathering a little bit, is if you want to be able to communicate with an individual, and this is maybe not even classifying them as a debtor at this point, but if you want to be able to communicate with them versus using some alternative communication method, whether that be text, email, etc., you would typically want to get that in writing that they're giving you permission to communicate with them in that fashion. And in this webinar, the recommendation was to, in the language that you would use, also identify that they're giving permission to not only you, but any of your third-party affiliates, associates, etc. And I'm working on trying to get that slide from this individual to share with this group. That way, when you send it to, if they become a debtor and they become delinquent, and you send it to the Department of Revenue, for example, that authorization to communicate with an alternative method also passes to DOR and or the third-party collector by having that information in your authorization that you would receive from them. So why is that important? Because as was attested to in this webinar, we kind of live in an age where not a lot of people necessarily want to talk with a collector on the phone. They would rather receive information via text or email and respond back and forth that way. However, you kind of are limited with that unless you get permission from them to do so. So as soon as I get that information on that slide, I will share that. Hopefully I'll get it in time to share with these minutes. But I thought that was an interesting piece of not just how are you interacting with that individual, but also asking in obtaining that permission for any of your downstream partners to have that same permission. And in this case, this collection agency was indicating how much they're seeing the transition to using those alternative methods versus what we would consider the more traditional phone calls. Doesn't necessarily mean that they won't use phone calls, but they tend to get more responses from folks when they're using those alternative methods that they might prefer. So just wanted to share that. I thought it was an interesting takeaway from that particular webinar. But does anybody have any questions or thoughts on use of alternative communication? Is that something that anybody is currently doing today? That and how did you obtain the authorization for that? And does anybody use email or as their primary?
Hi, Gerald.
Yeah.
Hi, this is Doris. So just a question. I am interested in that. We do have, for the accounts that we have through AR, we do get a lot of people saying, "Hey, just send me a phone text or send me an email." And so that is one of the things that I thought about is the information that we request from them. We're telling them we're going to use this information for this, but not as a third party for the purpose of a third party. So I am very interested in seeing what that language looks like, because I think we would like to implement that as we are communicating. And we do this again, like every day, whether we're sending out financials or information to attorneys. I'm always, hesitant about what I'm sending and should I just send it on regular, mail. So again, I think it's something that's interesting, and I think it's a great tool that we need, especially in these times where you're right, a lot of emails and texts are being used other than actual phone calls.
As soon as I get that, I will pass that along, whether it's in these minutes or separately. But yeah, I it's kind of one of those things. I'm a bit of the old school in terms of phone calls are the first choice for collection efforts in particular. But even before they become a debtor, it's kind of that going back to that debtor information gathering when you're establishing an account. What is your preferred method of us communicating with you? And if you want us to do one of these alternative methods, I need you to sign this form and check this box. And that will then give us permission to use that. And then it kind of comes back to your systems and where are you going to put that information to then be able to see that you have that permission to be able to send that email or that text message.
Right.
See in the chat, Katie says that real estate uses email to invoice and communicate about collection notices. So Katie, is that something that you guys obtain that permission when they are obtaining their license, or when does that come about that they're notified or given permission?
Hi Gerald, hi everyone. We just we changed the way we invoice them, and we no longer invoice them by paper. We do everything by email. So that's the way management directed us to start invoicing.
I'm curious to know, and certainly follow up later if you don't know the answer now, but is that something that gets communicated? When does that get communicated to them that this is the method that you will receive this information? And or again, thinking of normally there's an authorization form that says, yes, I want you to send me stuff via email or by text message, etc. And without that, you're typically not supposed to. I mean, I'm wondering if there was like a statutory provision that gives the agency that ability to do that as part of its licensing, rulemaking procedure, something of that effect.
I will definitely talk to management about that. one thing that each licensee, before they sign up, they do provide us with their email, so on their account, and that is the way the agency communicates anything to them is by email. So, but I will follow up on that too.
Okay. Other questions? Look like Amy asked, just to clarify, a customer is giving us their email address for general contact information. Is that not sufficient for debt collection purposes? I think it probably depends on how it's worded. If they're giving you permission to contact them by email, but it doesn't specify or restrict the purpose of that contact, then I would say you could use it for debt collection because they gave you that email for the purpose of communication. So I think it comes down to what is the language that was used as to whether or not you can use that for debt collection. And in particular, this example that I'm hoping to share includes that downstream. Not only are you giving permission for us to contact you in this manner, but you're also giving permission for any of our third parties, affiliates, associates, contractors, yada, yada. I forget the exact language now, but it basically kind of gave that, if we in turn are utilizing, whether it be a third party for mailing purposes type situation or notification of some kind, that third party can use that method as well. Or in this case, for debt collection purposes, Department of Revenue, their third party collectors. So hopefully that answers your question, Amy. Jeremy asked, when do we need permission versus don't need permission to contact by email or text? I think it's really generally to use a non-traditional, letter / phone call. My understanding is they either need to have been notified at the time that they're providing it, how it's going to be used, or you have a separate form that says, by signing this and giving us this information on this form, you are explicitly giving us permission to use this method of contact. Or might be worth clarifying what statutes would apply when determining whether an agency has a requirement to obtain permission versus when it's merely a courtesy or a policy decision. I think that's a good point. I think it really does boil down to, like I said earlier, if your statute gives rule writing authority for administration of a program or like a licensing type situation, that may give you that permission in that rule writing to identify, kind of like I said with Katie, if invoicing via email is our method of communicating with you, that's why you need to give us this email address. And we have that authority under this rule. And by being in rule, it had the opportunity for public comment, public, input on that policy. So yeah, I think it's not I won't say everybody must have a separate form. That's not what I was trying to convey here, but rather if you do have some method that they are providing that information, or when you are collecting the information and the form says, by providing this, you give us permission to contact you, it may be worth adding this other language about the other third parties as well, so that downstream in the process, that method of communication can still be used because they've already given that authorization. All very good points. Any other questions? Again, I will hopefully have that information to, again, it's a recommended. I'm not saying you need to do this today. We're not going to put out a new policy that says you need to add this to your process, but if it's something that I think more and more agencies are getting requests to communicate in these alternative methods. How might you make sure and cover yourself to be able to utilize that same method, not only as you, the agency, and the program in which they were coming in under, but whether it be your financial department to follow up on outstanding invoicing, Department of Revenue, third-party collection agencies that DOR uses, et cetera. All may be very useful if that information is incorporated into whatever method you use to obtain that authorization. If there are no other questions on the alternative communication, does anybody have anything for roundtable? Any general topics, questions, concerns? Hearing none, our next meeting will be on May 21st at 2 p.m. If you have any topics that you would like for that meeting, please feel free to email me at Swarm, and I'll be happy to add that to the agenda for May. With that, I have no other items on our agenda, so get you back a little bit of time in your day. I want to thank everyone for joining us today. I hope you had an informative time and we were able to take something away from this meeting, and we will see everybody in May.